Welcome back to Road to Fire. We're a family of three documenting our journey to FIRE, financial independence, retire early. Let's talk about our February 2021 portfolio update. Like always, I will provide all our real numbers through the 22nd of the month and outline our month-over-month performance, so please hang with me. It really does pay to be a long-term investor. I am finally seeing our hard work pay off in our portfolio at a rapid rate. Yes, I know the market had a phenomenal last 12 months, but if we were not investing for the long run, we could have missed this ride. I missed the ride back in 2009 to 2012 post the Great Recession, and I started investing a little bit after that time. I did not want to miss out on the next great investing wave. The first $100,000 was the hardest, and now it seems like getting to the next $100,000 threshold is happening much faster than we could have imagined. Staying the course really does pay off. So our investing strategy hasn't changed. We invest using the dollar cost averaging method, which is an investment strategy that aims to reduce the impact of volatility in the financial markets by investing small sums and having them invested periodically versus all at once. We believe in more time in the market versus timing the market. We invest on a set schedule despite whatever is happening within the market. Because we are long-term investors, this works for us. Right now, we send on average about $6,000 into the market after taxes month over month. Our hope is to continue to increase this as our income grows. We use Vanguard for 80% of our investments, and that is where our IRAs, Roths, UTMA, and brokerage accounts are housed. Our second biggest platform is Fidelity, and that is where our company 401ks are. We do have a small brokerage account with Robinhood that we plan to transfer over to Vanguard in the next coming weeks. So how can we invest over $6,000 a month? Well, we focus heavily on increasing our income. I will chat about our expenses as well, but increasing our income was key for us. We added 2 new streams of income last year, and I hope to add another 2 this year to help diversify our overall income. First, I finally got my channel monetized last year, and on average, it brings in about $250 a month with aspirations to get this to about $500 a month by the end of the year. We then bought our first house hack that has provided consistent rental income each month since November of last year. I then started selling items online using OfferUp. First, I focused on items we had around our house. Now I have shifted to flipping items from Goodwill. I'm not a DIY person, so I simply buy an item that I know or feel is trending, clean it up, put a good filter on it via Lightroom, and post and resell. February sales has been slow as I'm not budging on my prices for a few items. And the biggest way we increased our income was simply getting new jobs. Both my husband and I got new jobs in a lower cost of living city within the last 4 months. Combined, our new jobs will bring in an incremental $25,000 a year in a cheaper city. It took us a long time to get to this point, but it was key for our long-term growth. On top of increasing our income, we focused on cutting or reducing our expenses in a few key areas. Our biggest spending areas pre-COVID was the following. First was transportation. We worked last summer to not only pay off our Audi, but to shift all of our commuting to our Tesla, which was a lot more cost efficient. We both used to commute over 1 hour each time to work, which used to cost us over $275 a month in gas alone. Next, we cut down on childcare costs. We moved to a cheaper city that had a more affordable childcare offering, saving us over $400 a month. Since we now live close to family, we opted for a 3-day-a-week program versus a 5-day-a-week program, cutting the cost down even more. My son still gets to meet his little buddies for part of the week and then spends the rest with family. The third biggest expense was clothing, which was my personal vice. This has almost been cut down to zero overall. 1, I don't buy fast fashion anymore, and 2, I try to buy everything secondhand. I don't think I have bought more than 2 clothing items for myself in the last year. This alone has saved us hundreds of dollars monthly. Next is takeout. What if I told you we used to spend over $500 a month on eating out? Now, living in the Chicagoland area didn't help as well. Most weekends we paid for a babysitter and we went out to eat, costing us over $100 each time. COVID has really helped us get a better rein on this, and now we budget about $150 a month on eating out. Now, the last expense is travel, and I miss it a lot. We used to travel internationally 4 times a year. Last year we had planned to visit Vienna, Canada, Colombia, Singapore, and a couple of other places were on our list. But each trip was canceled, and we were fortunate enough to get most of them refunded. We will travel once we get the green light from the world, but just in a smarter way. Overall, these adjustments saved us over $1,000 a month. So let's dive into our current portfolio. Our numbers include all the investments we have across our 4 platforms and are through the 22nd of the month. We set up 2 big automatic investments at the middle and the end of each month. Our second investment has not cleared yet and is not reflected in our numbers, so there is upside for February overall. And because the market is always fluctuating, these numbers are simply a snapshot in time. Who knows what will happen at the end of today? So here is our current investment portfolio. I always break it out by what type of investment accounts we have, as it is easier for me to keep track. Keep in mind, these numbers reflect our joint accounts. First is our IRA, which accounts for 55% of our investments housed in Vanguard. The balance is just above $146,000. Next is our taxable brokerage accounts that have balances of just over $56,000 and represents 21% of our total portfolio. I hope to see this cross $100,000 this year. We then have just about $47,000 in our Roth, which is an increase from last month due to an issue caused by Vanguard that I will explain in a second. Our 401k with Fidelity has a balance of just under $14,000. These numbers are relatively low because my husband and I just started our new jobs, so most of our money is in our IRAs versus our 401k. Also, my company has a lower match at just 3.5% versus the 10% I got in my last employer that I miss a lot. And last is our HSA, which is just 1% of our total portfolio right now and has a balance just over $2,700. I did have a medical expense this month, but I opted to not use our HSA as we want to see this account grow over time. So our total portfolio amount in February to date is around $267,026. Now, if you split this in half, that's about $133,000 per person, which is relatively decent. I would love to get our investments over our gross income amount by the end of the quarter. Here are some of our recent buys. I'll be switching these out in Q3 to rebalance our portfolio, but I'm still investing in index funds overall. Let me know below if you rebalance your portfolio annually as well. Overall, finally seeing our day-to-day financial moves pan out in our investment is really good to see. So here is a snapshot of our investments from last month. I love sharing this as sometimes it's hard to see your growth over time without taking a step back to just reflect. Overall, there isn't a big shift in our investments, but there is one major change in our IRA and our Roth. So last month, I rolled over my 401k from my previous employer and I thought everything was completely correct within Vanguard. But no, Vanguard made a major mistake. At my old employer, I had a traditional 401k and a Roth 401k. Vanguard rolled over both into my traditional IRA. So my pre-tax earnings were mixed in with my post-tax earnings, which is a big no-no. I usually don't check my accounts, but when I make these videos, I do a deep dive. I noticed the mistake and I gave them a ring and they luckily fixed it all. But what would have happened if I did not see the mistake? Even long-term investors should check their investments once in a while just to make sure everything is set. So our order of investing hasn't changed in 2021. We always start with our company 401ks and our HSA, which are both set to be maxed out this year. We then load up on our traditional IRA, and now we have a newfound focus on our taxable brokerage account as we start planning for quote-unquote early retirement. This slide won't change this year unless we come into more unexpected income. I do see us potentially doing a backdoor once our tax rate decreases, as we do step down our mini retirement along the way. So far, we've invested $3,750 into the market this month and have another $2,250 going in by the end of the month due to our biweekly automatic investing strategy. Because we are still in a pandemic to an extent, our saving rate continues to be high, making it quote-unquote easier to invest. Now, if this was 2019 or another year, then we'll probably struggle to invest this amount each month, but I'm taking full advantage of our current climate to load up. Increasing our income to continue to invest more will always be our goal. So here is our investment trend graph. I will always include the last few months to better understand our overall growth. In October, we hit over $200,000 invested for the first time ever. And 3 months later in January, we hit about $250,000. Now we are over $267,000, which is great to see. It'll be interesting to see how many months it would take us to hit another $100,000 invested. From last month to this month, we saw an over $17,000 increase or 7.7% growth, which is really insane. We obviously did not put in nowhere near $17,000 into the market within the last 30 days. So yes, compounding interest is definitely delivering for us. I would love to get to $300,000 invested by the end of Q1 or early Q2, but I can't predict the future. So how are we tracking to our goal of investing over $75,000 into the market by the end of the year? Right now, we've invested $9,975 post-tax dollars into the market. That would get us to about 53.2% to our Q1 goal. I like to break my goals down into sections so I don't freak out overall. But if you add in our last automatic investment of $2,250 for February, then we'll get right about 65%, which is where we need to be. So we are right on track for our overall goals so far. I'm happy with our strong start to the year, but I have to remember that whatever happens in the market is out of my control. Now Q1 is looking pretty solid right now. We will continue to stay the course and keep on investing using the DCA method. Frankly, no one knows what the market has in store, but right now I'm happy with where we are. A few months ago, I was whining or discontent about our total investments, but what I needed was more patience because building wealth takes time, consistency, and focus. These aren't my strength. But now I'm finally seeing the fruits of our labor pay off in the market. Now, we're not millionaires yet, but it does feel like it's something that we can achieve within the next several years. Now, if you made it this far, thank you so much for watching. But don't forget to like, comment, and subscribe below. Until next time.